Yo, what's up, everybody? This is Leo. Uh, I'm new to the YouTube, for say. I'm trying to start up a new channel. I'm a college student from Long Beach, and I'm just trying to start up a YouTube channel for investing. Uh, so, in my attempts to do that, here I go. A recent stock that I've been taking a look at would be AURORA Cannabis, or also known as ACB. I just recently started investing, I would say about 2 weeks ago. I don't have much to invest, but I have made double my money. When I mean double my money, I've made $300 profit. So, what kind of led to that was my previous background. I used to work at a bank, so finances and just anything to do with money kind of interests me already. So that's kind of just what steered me into that. And I decided to go back to school and study a bit more about the stock market and etc. And here I go. Hopefully, one day I can make this into a daily living, and maybe you guys could too if you guys decide to follow this advice. As I would be explaining later throughout this channel, as certain I use certain forms of research, graphs. I read certain types of graphs to identify when it's the best time to buy up, buy a share in the company. If you want to, consider taking a position, it's always best to, buy when it's low instead of, when the price is, higher than usual. So my goal is kind of to help you understand, how to, check about that. So the platforms that I use are as followed. Thinkorswim is my platform for research, and I'm going to be explaining why in just a moment. Alrighty. Okay. Let me go ahead and change this to the day, as mostly when I do have ACB positions, I normally just I day trade them depending on how the price action is on the day, or if it's what I consider a crappy day. I normally just swing them. Like for example, this past Friday, we experienced a dip, and I went ahead and I took a position and I bought some ACB. Um, the reason why, you'd probably be like, why did you take a position when the stock was going down? Well, as you see in this, in this graph right here, you see a lot of price action going on. As you see, it was fluctuating from 734 to 730, respectively throughout the day. Well, throughout, I would say 12 and forward to the close of market. And then after market, we saw a huge sell off. But after that huge sell off to the new low of the day, which was 728, it rose back up. And you might wonder, why did it raise back up? Well, normally people tend to buy at this portion when the RSI, which is a relative strength index meter, um, that's one of the graphs that I use on Thinkorswim as an add-up. Um, so, whoops, my brother texted. So when that marks under 30,000, that normally indicates that the stock is being oversold. So that normally means that it's the best time to take the position. However, let's say for example, let me change it to a portion where it says it's overbought. As you see right here on the RSI, it's marking in the red, over 70,000. It looks like it reached 84,000. So because it reached 84,000, that means it was saying lots of people were buying the stock, and normally the price was inflated. Mostly, it's you're gonna lose money if you buy there and decide to hold. For most stocks, at least, as you see, normally Aurora goes into oversold, it dips, and like say for example, you buy here, it repeats. It's kind of just a repeat, situation. But right here we see a huge sell-off where it says oversold. And as you see, once it hit oversold, it recovered semi. And like say, for example, we bought here and you sold here, like say, let's zoom into that little category right there. Let's say you bought at the oversold mark at 745, for example, right? At this portion, you were just considering just trading, not swinging the position, not holding this long term. It's more of a quick, buy and sell. And I know many people don't have profiles over 25K. I myself do not. So I use multiple platforms to get around this, as you get three per every 5 business days. So on Robinhood, I do three. On Webull, another three, etc. Thinkorswim, and whatever other trading platforms there are. So, as you see, right here, it reached a low of 745, but it spiked up to 764. Please pardon me. So let's go ahead and take a look at that. Uh, that's like about a 19-cent growth, you know? Oh, actually 18 or about 19, 18, 19. I'm not doing the exact math. But let's say, for example, if you had a couple thousand to throw at it, yeah, that might not sound like a lot, like 18, 19 cents per share. But if you throw a couple thousand at ACB per se, then you buy 100 or 200 shares, or however many much you can afford, and those 20 cents become multiplied. So let me just go ahead and pull up the calculator over here. And let's say if it went up 18 cents times you had 500 shares. You made $90 in just a blink of an eye. Now, if you look at it that way, and you see it as, oh, I could get $90 one day, I could get $100 another, and you continuously, build up your profile, and you could continue, to build it, and you have more money to invest, then you could eventually start making a living out of this. Now, let's go ahead and go to Aurora the day for Friday, which would be March 1st. There was a huge sell-off after it being 765. Sorry. Um, the reason behind the sell-off, I do not know, but I know that the reason why that price spiked, and I believe it even reached $8, was because ACB made efforts with Portugal to expand their market over there. They made a deal, and everybody freaked out. And ACB is a very news-driven stock, so any news about this stock would generate any type of price fluctuation. So as we see, when this dropped, I actually bought at 734, and like say for example, I bought at 734, right? It wasn't the lowest, but I bought at the oversold, sorry. And as it went up, it even went up as far as 10 cents. But let's say if I threw a couple thousand at it, even if it just went up like 9, 10 cents at that period, which I know ACB will go up more in the future, even though the earnings report for the past quarter was kind of eh. I feel like, this would be a good long term swing position. But even if you decide to day trade it, those 9 cents, per share, if you throw a couple hundred, at it, you can make a decent, not not a lot, but I mean, depending on how much money you throw at it, you can make some money. As you see, another graph that I use over here would be the MACD line, basically telling me when there's going to be a reversal normally. Or what a reversal is when the price goes up, and you might think, oh, what if it goes up, What if we might keep going up, more up, and up, and up, and up, and it reaches new highs? Well, this graph right here tells me when that happens, and of course, when that's not going to happen. In regards to this one right here, you see that it rose over the SMA line, the SMA line being this one. SMA line basically saying this is the average price per share at the moment, at the market. So that changes every minute. So, as you see right here, when it's oversold, the MACD line shows it under the SMA line. But when it's going to start going on an uptrend, you would normally want to buy here, for example, at 735 or 733, or if you get lucky, wherever you buy. But you want to buy in this area, right? So, oops. I lost that, but here we go. You want to buy in this area. And as you see that you're going to make profits from here, you're going to start making profits from wherever this margin was. And as you see on the MACD line over here, it's showing you that it's about to start going upwards because it's breaking the SMA line right there. So if you buy somewhere around here and ride it up, depending on how the volume is as well, because volume also, is important. As you see, the volume was very high when it was oversold, and as it started correcting itself, it still maintained itself somewhat a little bit okay, average, but let's say the volume was enough to bring it right back up from 33 to, let's say the highest was 42. Right? So that's like a 9-cent profit if you played it right. But like I said, if you throw a lot of money at it, of course you can make profit. One example that I used in the past, this one was previously, it's just a quick one. The video is getting a little long at the moment. But this is just a quick example. I did Sears Holding Corp. When they announced that they had a buyout to save it from bankruptcy, I actually bought in the company because it started spiking up actually. I was doing research on the company from when it was 75 cents, and it raised up from 75 cents all the way up to the high, which was like about 270. That was the highest it went, and then it shot right back down. Of course, that took a little while to buy in my position, so I bought in when it was like $1.50, and I bought respectively 350 shares, I believe, and I bought them for $1.50, rode it up to 270, but of course I was new to trading, got a little greedy. The profit went down from 270 to 250 per the share, and I ended up walking away with a couple $100. So of course, as you see right here, it's all just by reading the graphs. Like I said, it was oversold, so I knew that there was bound to be a reversal. The reversal occurred here, as you see on the MACD line. It just went straight down, and I walked away with my profits because I knew it was not going to go back up. As you see, Sears went up, and then it's now currently at 85 cents. Now, my goal in this channel is to help you understand these graphs a little bit more. Of course, if you like the content and you would like to see more, please like and subscribe. And I'll see you in the next video.